Good morning. This is Tom Alexander. It is Sunday, May 12th. This is the weekend update for the U.S. stock indices for this date. I do this every weekend. I send out a notice. If you're not getting notices, I also send out free reports periodically. If you want to get on my list and you're not on my list, shoot me an email, tom@alexandertrading.com. You can also go to the website, alexandertrading.com. Click under weekend reports, and you can have access to the archive of all of these reports, both in this video format, as well as a PDF written format. You can go back and check and see what I said at various turning points. You can see the consistency and the objectivity of the methodology I use and see if it might be something you're interested in. It's pretty simple, and it's going to be in perfect display today. So as we head into next week, there are several economic reports, the latest and greatest slate of economic important data comes out beginning on Tuesday. And it really doesn't matter what it is. What matters is the reaction to those reports. But those are the things that I think the market will be fixated on. Just from an exogenous perspective, that will be the excuse, the attribution for whether or not the market goes up or down. Now, is the market going up or down? Well, we don't know. But what we do know, and this is what's most important, it's very easily, if you are actually a trader, to get too caught up in predicting the market. Now, you may think that, well, gosh, I have to predict the market. I have to know which way it's going to go. Well, no, you don't. You can't know which way it's going to go. You can know which way it is going at that point in time, and you can trade in that direction. If you get into the guessing game of picking tops and bottoms, you will have a very frustrating and/or a very short career. So let's take a look at what the market is doing today, and let's take a look at what might happen, or what, if it does happen, would indicate a potential change in trend. And this is all objective information. There's no guessing. There's no magic. So let's just take a look, and we're going to start with the daily charts of the indices. And this is the SPX. We are less than 0.5% from a new all-time print high. You can see the market has basically been vertical off of this low back on the 19th. At that point in time, I discussed that could be a very important low, and I gave reasons why. And you can go back and you can look, again, you can go to the website, look at the report for that week, and see on that Friday that I suggested that we could be in process of putting an important low, which certainly we did. All right, let's just take a look at the index. The index is a little more than 1% from a new all-time high. The Dow made up some ground last week, had a furious week to the upside. It's up 0.74%. Now, the indices are up 7 or 8 days in a row. And exactly what does that mean? Well, what it means is really not much, because we are in a bull trend. You very, very, very seldom see 7 or 8 down day consecutive closes to the downside. Very, very seldom. Actually, you very seldom see more than 4. Bull trends are different. Bull runs, bull legs within bull trends are different. You can get streaks like this. We're certainly in one. But it doesn't mean the imminent Armageddon intergalactic high is imminent. Okay, the Russell, of course, is lagging the most. This is a yearly high. This is not really close to an all-time high in the Russell. So let's go back, and I want to show you something else. So these lines that I have drawn here are the inflection points for this market, the key reference areas. There's really nothing above Friday's high in the SPX until you get to a new all-time high in terms of potential resistance. I don't use magic numbers, all that other stuff. Okay, I use strictly market price action activity through the lens of auction market concepts. That's very, very important. It's a very consistent, objective way of viewing the market. We are trading auction markets. That's a fact. Nobody can argue with. So if we look at this, we can see several things here. This is a pivot low. If we take this out, that would be an initial signal that something has changed in an intermediate term time frame. Now we can go down in time frame, which I'm going to do here. Here's the 30-minute chart, and it's clear. It's very clear here. What do we have? We have a series of higher lows and higher highs. The trend is up. And on a super short-term basis, the trend is up. If you're a day trader, the trend is up unless this level is taken out. So if you want some objective signal to know when the market may have turned, it comes through price action. And it comes through price action doing something that it has not done to that point in time within the particular trend that you're analyzing. And in this particular trend, if we take this level out, that will be an incidence of price taking out a previous higher low. It really is that simple. Now, are you going to be super profitable? What if it takes out that higher low and then reverses and takes out this pivot? You have a loss. But at least it gives you an objective place to start with your analysis instead of guessing, okay, this is the top. Okay, no, this is the top, but I'm just going to add a little bit more. Oh, no, this is the top, and I'm going to add a little bit more. And all of a sudden, you don't have any money left. And that happens to people every single day in the market, especially day traders, especially scalpers, because they're constantly adding to losing trades, and eventually they run into a trend day and they get run over. So this is the objective level that has to come out in the SPX. You can go to a S&P chart or a ES mini chart, do the exact same thing. That has to come out to be an initial signal in this time frame that something is developing to the downside. Now, I want to show you something else. I want to show you the profile view of the market. And this is market profile. I have been working with market profile almost since it was initially posited by Stellmeyer in the mid-1980s. Market profile has been hijacked by the guru magicians of the market and turned into something magic that it's not. What it is, it's a graphing format. It's a graphing format that highlights a particular perspective of market activity. It organizes data with an emphasis on the horizontal scale of the chart. So you have now in this particular configuration, I have this set to a monthly profile, meaning each one of these profile units is 1 month of trade. So I have this artificially and chronologically partitioned off into 1 month increments. Each letter is 1 day of trade. But you can see if you look at each month, if you look at April, if you look at March, if you look at February and January and December, which these are all extraordinarily vertical markets. We've been in a big time bull run here. What is different so far about May? Well, you don't really have any accumulation of volume in one place. You don't have that high volume node that will develop and is overdue to develop. So what you're seeing here is the auction market process in effect. The auction process has 3 steps of development: a trend, a stopping price, and development around that price. Then it starts over again, and that is occurring in all degrees of trend, all degrees of trend all the time. Well, we are in a step 1. So this market is not going to continue to go up at this rate of change. That's something, I'm not in the predicting business. It drives me insane, all the stuff that people use to predict. But in terms of auction development, it is one thing you can predict, because, and please, by all means, prove me wrong and let me know that I'm wrong, okay? You're going to get development at some point sooner rather than later, and you're not going to continue to go up much longer at the rate of change that we've been going up for the month of May. You're going to get some sort of rotational market here. You're going to get more overlap on a day-to-day basis. You're going to have a consolidation. You're going to have a range establish itself. When? I don't know. Now I can't tell you when, but I can tell you that we're not going to continue up at this rate of change. You can go back and look at the profile chart to the, as long as you have data, and you're going to see this exact pattern play itself out. Now, each auction, and again, this is just one artificial time frame of 1 month. In reality, an auction is an ongoing process that does not have chronological barriers, but because the auction process is so robust, we can break it down into like time frames, and we can see the auction within those time frames. And so you can look at each of these auctions, and you can see, even back in November, as vertical as this auction was, and it was as vertical as you're ever going to see, you had these pockets of development occur along the way. And what have we here? We have not had one yet. So that's coming. Now, once we develop that pocket, that will be a step 3. Then we will break out of that either up or down. But the current message is that the rate of change that we've seen the May auction so far is very likely to soon begin to slow down. Now, again, next week we have economic numbers that come out that could drive this market another 3 or 4% higher, but could also drive it 3 or 4% lower. I don't know which. For that purpose, you go down to your 30-minute charts, and as long as the market is making higher highs and higher lows, you favor the long side, or you stay out of it. Or if you want to short it, you wait until that chart takes out a previous higher low. You don't need magic numbers. You don't need guesses. It's that simple. Right now, the trend of the market is up, but the trend of this market is very soon going to, at a minimum, slow down, and you're going to get a more rotational market out of it. Okay, guys, I hope you enjoy the rest of your weekend. Please check back in if you found value in this. Please like, please subscribe. You can also shoot me an email. I'm happy to answer questions, tom@alexandertrading.com, or you can make comments, ask questions in the comment section here, and I'm happy to answer them. You guys have a good afternoon, and I'll speak to you again very soon.